Hey guys, it's Drew Kuhlmann, the real estate coach. Today we're going to go over a topic that's so important, and a lot of people either love talking about it or hate talking about it. That's money and mortgages. Okay, now you may be saying, Drew, are you a loan officer? No, I'm not. I'm a realtor. I'm your real estate coach. I'm here to guide, protect, give you an advantage. But by doing that, I got to know other pieces of the puzzle, because most people do not realize this. Even loan officers may not realize the difference that our relationships have. We have a fiduciary responsibility, which means I have to have your interest above all, right? The loan officer, their interest is for the bank. It's to their shareholders. It's to gain as much commission as possible on getting the product. So I need to educate you to know your options, so that way when you talk to the loan officer, if they kind of start steering you to maybe a product that may not be as advantageous to you, you know the right questions to ask to have an analysis on the topic. So, and again, as a realtor, I'm sending you to the people I trust and know, and I truly say, okay, they're going to figure out what's best for you and put you in that product, not just always steer you to the highest commission-based product for them. So that's part of what I do, why I have preferred professional lists. You're welcome to use your own lender, but if you want to ask me about people I recommend, we can go that route. Okay, so let's get this party started. What I'm going to do is share the screen, and we are going to, first thing I want to do, so you know that we're using real numbers, I'm not just making stuff up to try to have an agenda. We're going to look at, this is Wells Fargo. We may be able to get better interest rates other places, and that's a whole different topic of being able to truly compare what is the best product. Because sometimes interest rates will be really low, and then all of a sudden you'll get hit with some, much higher fees, we'll say. But anyways, let's get started right here. A 30-year fixed, 4%, okay? And this is as of May 24th, 2019, okay? And then a 15-year fixed is 3.375. Well, most of us know 3.375 is less than 4, so that must be good. But we don't know how good, right? So that really doesn't tell us anything, aside from, let's take the next step. Next step is calculations. So let me find a calculator for you. And I've just already run this scenario through, so that way save you time and get you the same information. 15 years versus 30 years. What we're going to do is, and what I did was it asked me for a lot of input as far as, I think I used a 30% tax rate. I plugged in the 3.375 and the 4% for the two and hit calculate. And what it said is, in a 15-year mortgage, you're going to pay $463 more. Okay, so, but this is the big part. You save $88,586 in total interest paid over the life of the loan. Now, I may have said it earlier, I can do a great job negotiating for you. I can save you, thousands on your next home purchase. I can't negotiate $88,000 off most properties. And if that's a type of property that I can negotiate that off, you give me a call, because you are going to get exceptional service. I give great service anyways, but when we're dealing with, the 500s and up, we're going to crush it. Okay, so you're saving $463 a month in interest. Well, no, I'm sorry, you're paying $463 more a month on mortgage payment. You're saving $88,586. What you should do is consider this 463, it's really an investment, obviously. You know that if the interest was 3.375, every time you pay down that mortgage, you're getting a guaranteed 3.375%. Now, because that gets compounded, it's really more than that. But then, let's look at this down here. So here's the difference in the breakdowns. In the 15-year, you're paying over $1,400 a month. On the 30, $954 a month. So again, this is for savings for you for the most part. But then look at this. If you say, you know what, Drew, I'd prefer to keep the money in my pocket, well, and you know, a lot of people can't do this. So this is just sharing information of what's ideal if you're in a financial spot for this. This is more for typically conservative people. It could be upsizing or downsizing. Some people, you know what? If you can reduce the price of the home to afford the 15-year, I know people don't want to get the biggest and the greatest, but at the end of the day, we got to figure out what meets your needs, what makes you happy, because the financial aspect could change your life if you're comfortable. If you're not, in 15 years, you have no monthly payment, and let's say you have a kid going to college and now you have $1,400 less a month you have to account for because there is no mortgage. And if you want to help your kid in college, you can do that. Or if at that point you want to travel more, you can do that. You just generate more options in life later, not instantly. But where I'm going with that is 15 years. Let's say that in 15 years, I was to say you were able to do this. You could either have no mortgage payment. Think about that for a second. How would you feel having no mortgage payment on your house versus $129,000 left? That's a big difference. So I just wanted to share this with you. It's not for everybody, but it definitely has its advantages if you can make it happen. I hope this helps. I'm available if you want to give me a call, text, email. If you have any questions about mortgages or just real estate in general. And again, I know my fair share about that aspect, but I'm not a professional at it. So I always will have people that I can, have you talk to. But again, I want you to know some of your options, and I'll give you some great questions to ask so you really can make the right decisions. So anyways, I am going to stop sharing the screen. I'm going to say farewell, and I'll talk to you soon.